Are you thinking about investing in or trading PayPal stock? Then you need to know about the $228 million tax loss they just revealed with earnings just around the corner. Hello and welcome back to the channel. If you're new to town, my name is Jimmy, and on this channel we talk about trading in the stock market. PayPal is a company that enables digital and mobile payments on behalf of customers and merchants worldwide. For most of us, they just offer a safe and secure way to shop online. Now here's my issue with PayPal. They revealed in a regulatory filing that they expect to have a pre-tax loss of $228 million as a result of two specific strategic investments. Now, the first investment they made is in Uber Technologies, which is down about 34%. And the second is in a Latin American online retailer named Mercado Libre Inc., which is down about 10%. Now, the associated impact on earnings per share is a negative about 15 cents. Now, PayPal is currently trading at a level that it hasn't seen since March of this year, and this has made it super attractive to me personally. Now, despite these losses, I want to share with you the three reasons that I love this stock and why I'm going to start nibbling shares. Number one, they have an amazing balance sheet, which includes a 22% debt to cash ratio, as well as $5 billion of cash on hand, as they are a profitable company. Number two, they're showing great growth. New accounts have grown by 17%, and they're noticing increased activity in their pre-existing accounts. And their overall payment volume is up 26%. Now, PayPal has also established some business relationships with some big companies like Uber and Grubhub. Now, if you're worried about PayPal's exposure to Facebook's Libra cryptocurrency, don't. Because they recently pulled out of the Libra project due to governmental pressure. PayPal recently settled near $100 per share, and price hasn't been this low since last March. The one thing you need to be aware of is PayPal has earnings coming up on October 23rd, and I anticipate an overreaction to the downside due to the news surrounding the $228 million pre-tax investment loss. So my plan moving forward is to begin selling put options to gain an initial position on PayPal following earnings, and then continue nibbling shares on future dips in price action. Now remember, don't trade based on my opinions. Do your own due diligence before you invest in any of these stocks. These are just my investment plans. So with that, let's jump into the charts and let's take a peek at some technical levels.
Okay, I've got the weekly chart up here on PayPal, and I just wanted to start off by showing you some technical levels, and then I want to blend in some information from TD Ameritrade's website on PayPal and just continue to talk about my plans for it and why I like it. So first of all, if we now move from more news-based information and fundamentals into technical analysis, we can see in here that PayPal had a really nice run up to here, up to about 121.48. Then we got a sharp pullback, and you can see if I hover these earnings down here, we've got an actual beat on earnings, but they did have a drop, a pullback to the upside, and then a continued drop here. So on the weekly chart, what I'm liking right now is that we are right back down to the 50-day simple moving average, which is this red line. You can see in here we touched it a bunch of times, and it sort of respected that level and then moved away from it, and we continued to the upside. You can see back here as well, we respected the 50-day simple moving average, and PayPal did IPO back here in early July of 2015. So you can see the 200-day simple moving average has just begun right here, showing an uptrend, which is a good sign, but kind of began back in April 29th of this year. They were able to finally start showing this on the chart. So we've got some information right in here, and let's zoom in just a tiny bit, and you can see we've had some increased volume with some of these sell-offs, but like I said, now on the weekly chart, one thing I'm liking is we had the pullback, but we're also getting the MACD pushing down into the red. And in videos prior to this, I'll link a video up here. Just click this card if you want to check it out, but it's a video where I talked about the MACD and how I pick stocks. With expansion to the downside, you typically get some reversion to the mean, and that means reversion back to this line. So we get a push down to the downside, we expand the MACD on the red side, and then at some point, like it did back here, we get a little reversion back to the mean, and then typically a little follow through to the green side. It doesn't mean it has to happen, it's just something that I like to see, and that sort of guides my trades because usually we get a reversion back to the mean. So right now we're expanded to the downside because of this pullback. We're right down near $100, and this is something else I want to talk to you about. So this is a super important point. The $100 level is a big psychological support level. There are psychological price related levels in charts, typically whole dollars, half dollars, big whole dollars like 100, 50, like 10, 20, 30, 40, 50, multiples of 10 are big, multiples of 100 are big, 100, 200, 300. So when you have a stock that has multiples of 3-digit numbers, 100 is a very significant psychological support level that we have to pay attention to, and we just happen to be right down near that level. So we're expanded to the downside on the MACD. We're pushed down into the 50 simple moving average. We're at a psychological support level. And now I'm going to flip over to the daily chart so we can talk about it a little bit. All this just looks really good to me. And you can see on the daily chart as well, we got a push back down. And on the 200-day simple moving average on the daily chart, you can see we're uptrending, which I like to see. We're getting this red MACD activity down here. And now I want to see a reversion back to the mean and a move to the upside. We're off our all-time highs of $121.48. So all good things are happening right now. And then we have earnings coming up on October 23rd. So here's the complicated thing about PayPal. It has earnings on 10/23, but it just came out with this news about the $228 million tax loss, the pre-tax loss they're going to take because of their 2 investments that have declined in value. Now, those investments might very well come back. So it's not a huge issue. It's just the market will likely overreact to it. And when we take that information into an earnings report, that creates uncertainty, and I think the markets are not going to like that. So what I anticipate happening is we're coming into earnings on the 23rd. The markets are not going to like the $228 million pre-tax loss that they're going to reveal or show. Again, it's already been revealed. I think the markets are going to hammer it for a few days, and then once we start to see a return, a slowdown, and a return back to the upside, that's when I want to be getting long. And the way I'm going to approach this, and I'm going to actually flip over here real quick to PayPal. This is the options chain, and what I'm going to do is once we get to the point where earnings are done, we've been hammered for a couple days because of the tax loss, I'm going to come in here and I'm going to start looking for selling premium opportunities. I want to go ahead and sell a put on PayPal at a level that will get me some good premium, but that's also close enough to a level that I'm comfortable with that I'm okay if I get exercised and get assigned those shares and have to buy them because I want PayPal at this level. I use selling puts as a strategic way to get good positions in stocks that I do want to hold for the long term. So when I'm trying to invest in a stock like PayPal, because the fundamentals make sense, because the balance sheet looks good, the technical levels look good, and the news is doing what it's doing, and I'm okay with it all, then I'll go ahead and sell a put with the hopes of a little dip so that I can get exercise shares, and then I will have those shares moving forward. Now here's the update. Ameritrade no longer charges any trade fees for stocks, ETFs, or options, and there are no more assignment fees. So if I get assigned shares, I don't have to pay the previous $17 assignment fee. That's gone. The only thing I'm going to pay is 65 cents for each contract that I go ahead and choose to sell a put on. And if I'm just going to sell 1 or 2 right now, that's only going to be either 65 cents or $1.30. So either way, I'm okay with that. That's really inexpensive to be able to get a good position in a stock like PayPal. So really quick, let's jump over. I'm just going to bring up TD Ameritrade's platform here, their online platform you can log into and do stock research. You can see I've got PayPal up, and I just wanted to come through here and just show you what they've got going on. So they have a nice setup here where you can open up these, you can toggle open this liabilities columns, and if you come down right here to total debt, you can see over here their total debt is at 1,998 and it's in millions, okay? Now, we take that number, total debt of almost 2,000, and we come up here to assets and we look at their cash. Cash and short-term investments, 9,109. So like I said in the intro, 22% debt to cash ratio, which I really like. That's really appealing to me. I would call this a B plus balance sheet in terms of assets versus debt. Now, the other encouraging thing is some people say, well, okay, cash and short-term investments, but what if they're short-term investments, what if that money's really tied up, not for the long haul, but for the near future? Then I say, okay, well, let's look at that. Is the short-term investment level, is it overwhelming their cash? If you look here, no. 1,534 million on the short-term investments. But if you look at just their straight cash, it's 7,575 million, or $7.575 billion in cash. Now that's 7.575 billion. If you come back to their debt, you'll see really quickly that of all their debt they have here, they could pay that all down in a second with the amount of cash they have on hand. So tons of cash is a really great sign for a stock like PayPal. Now, if we go into the valuation tab, this is another area I wanted to look at real quick. You can see their PE ratio. When you initially see their PE ratio, it's about 48 times, okay? Now, if you look at the industry, it's 33.81 times. So PayPal is a little more expensive than the industry, but we've just had this big pullback, and with the earnings and the anticipated downside after earnings, I think that PayPal's PE ratio is going to be looking more comparable, or at least closer to the industry average. You can see price to sales, PayPal's a little better position than the industry. Price to book, also a little better than the industry. And then PEG ratio, I haven't really been looking at that as much. So that kind of gives you an idea for PE, price to sales, and price to book. Now, in terms of a dividend, they don't have a dividend at this point. If we go back to fundamentals, we can kind of take a look down here, and you can see financial statements at a glance. You can see cash flow improving over the years, 2018 being the highest so far. Income, continual growth in income, and the overall balance sheet, cash and short-term investments, every single year shows an improvement. So really positive things for PayPal. So again, the plan moving forward is just to go ahead and sit tight, let it go through earnings, see what happens after earnings. I anticipate it getting beat up a little bit, and then I'm going to look to sell puts so that I can jump in and hopefully get a long position.
All right, everyone, let me know in the comments below if you currently own PayPal, and if so, how long have you held the position? And if you found this video helpful, hit that like button. If you're a first timer here on the channel, consider subscribing and joining our team, and we'll see you tomorrow.